To enhance the financial services sector, the government of the Bahamas is developing a new framework aimed at strengthening industry regulations and protecting revenues to the public treasury.
We are working to maintain the Bahamas' competitive edge as a global leader in the financial services industry and ensure that the country's second economic pillar remains vibrant over the medium and long term. The establishment of this new framework follows broad consultation with industry representatives in both the private and public sector, some of whom are represented here this morning. We also sought input from international tax advisors. Under the framework, all financial institutions will now be permitted to offer services to both domestic and international clients, provided that the financial institutions meet the prescribed regulatory requirements in respect to the services offered. It will remove any difference in the fiscal treatment of financial institutions that cater primarily to domestic markets and those financial institutions that cater to international clientele. This is essential to removing the preferential treatment of specific businesses as implemented under the recently passed Removal of Preferential Exemptions Act 2018.
The new framework, which is intended to take effect as of the 1st of January 2019, proposes that financial institutions, including banks, insurance companies, trust companies, investment advisors, mutual fund administrators, broker, dealers, and other regulated financial services entities will be exempted from paying business license fees when renewing or applying for a license starting January 2020.
In lieu of business license fees, financial institutions will be subject to a three-tiered system as follows. 1. All financial institutions will pay a flat registration fee, which will be set on a sliding scale between $2,250 and $250,000 per annum, although small institutions like credit unions will pay a much lower fee, as is currently the case. The applicable fee will be determined primarily by the operational complexity of the institution, which aligns with the level of resources expended to regulate financial institutions based on their respective size and complexity. 2. All financial institutions that are deemed systemically important, as determined by their degree of integration into the domestic financial system, will be subject to an additional fee in respect of Bahamian dollar liabilities and contingencies. This reflects the need to mitigate the threat that any domestically systemically important institution can pose to the entire Bahamas financial system. And 3, any bank wishing to access the domestic payment system and or wishing to operate as an authorized agent or for Bahamian dollar transactions will be charged fees reflecting the substantial supervisory and management costs of these arrangements for the Central Bank of the Bahamas and other public sector agencies.
Over the coming months, the government will make the necessary legislative adjustments to allow for the implementation of the new framework. And in the coming weeks, we will continue to engage all stakeholders to ensure an outcome that is best for our nation.
Let me be clear. While the Bahamas is committed to taking progressive steps to adjust to the requirements of operating in the constantly evolving paradigm that is the global financial system, we will uphold our sovereign right to do what is in the best interest of our economy and what is most aligned with our economic development at all times. We remain concerned and have voiced those concerns in international forums about the appearance of the shifting goalposts when it comes to the Bahamas and other international financial centers. We will continue to press and to argue this point in these international arenas.
I'm Synovia Williams, and this has been a BIS Update.